You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
All right, everyone. Good morning, afternoon, or evening, depending on where you are in the world. I think most of us, it is 11 a.m. GMT plus 8, is seeing who's in from the LCMS Traders Club, and a big welcome to everyone too that is watching the live call. And if you are looking to get into the LCMS Traders Club, make sure you do visit the Jindal Thai website, and we are taking on new members as well. But just before we do get into it, a quick recap of what's been going on. We did have quite a lot going on last week, and if you have missed any of the calls, make sure you do check out the YouTube channel as well for LCMS Traders. We do share all the currency calls up there as well. And we will be talking the Aussie and Kiwi. We'll be talking RBA as well with Gimme. We've got the DXY. And in particular, there is a lot to talk about with the Aussie and the Kiwi as well, with their recent moves that we have seen, with some small bounces to discuss, but definitely some trading opportunities this week with a lot of high impact news that is going on. So please make sure to watch the whole video. If you do miss it, we do post it up in the Traders Club with the timestamps as well. But before we discuss anything more, just to get the formalities out of the way, I will do the risk disclaimer as well. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering into any trades. So just to get us kicked off today, we've got the RBA meeting tomorrow, and Gimme is just going to go through a bit of a preview for that, and I will hand it over to you now. Gimme.
All right, thank you, Scott. Happy new Monday. Wow, we are close to the start of the month already. Okay, it's the last day of January. Okay, so whenever it comes to the start of a new month, okay, normally we can actually expect the Reserve Bank of Australia's meeting, right? So this time around, wow, I'm not sure if it's lucky or what, okay, but we have the RBA meeting on the first day of the month, which is tomorrow. All right. So yep, they will be meeting tomorrow at 11:30 GMT plus 8. Okay. So what can we expect? All right. Previously, okay, what did they actually do? They held interest rate unchanged at 0.1%. Okay. Quantitative easing, okay, remains at 4 billion, all right, per week, 4 billion Australian dollars per week until at least February 2022, which is tomorrow. Okay. So what this means is that, all right, the Reserve Bank of Australia will be carrying out another round of evaluation, okay, QE evaluation specifically, tomorrow during the meeting, right? So depending on actually depends on how the economy turns out, okay? Actually it turns out quite, I would say quite good, right? In terms of inflation as well, okay? Inflation in Australia, okay? The data released back in, a few days ago, I believe, okay? For the month of December, was reported to be, let me see, 3.5%, okay, on an annual basis. All right, so that's actually quite high as well. So, they're actually pretty much, high across many of those developed nations. All right, so no surprise coming in from Australia. Okay, so with this high inflation, okay, in Australia, we can expect the RBA to do something. All right, but before we go over that, all right, I think few days after the previous meeting, okay, Governor Low actually gave a speech. Okay, I'm just going to bring attention to that speech because it involves the evaluation of the QE tomorrow. Okay, so the RBA and the Australian economy, yada, yada, yada. The most important point over here is the monetary policy. All right. So over here, okay, as you can see, I would like to finish with a couple of points about monetary policy. The first relates to the RBA bond purchase program, which has provided important additional support to the economy during the pandemic. Okay, it has led to lower, okay, blah, 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 so on and so forth. Okay, now, the board will consider the future of this program at its next meeting in February, which is tomorrow. All right. Ahead of that decision, we had a preliminary discussion of 3 options at our meeting last week, during the December's meeting, with all 3 options based on the premise that the economy does not experience another serious setback. Okay, so what are the 3 options? Now, the first option discussed was to further taper the bond purchases from the current rates of 4 billion Australian dollars a week, okay, with an expectation that the purchases would come to an end in May. So, the first case is basically just maybe carry out a tapering from 4 to 3, okay? Then bond purchases will be carried out at 3 or maybe even 2 a week, okay? And then subsequently carrying out more tapering of QE until it comes to an end in May, okay? So February, March, April, they have 3 months to, 3 to 4 months to taper, okay? And then in May, they'll be done with bond purchasing. We'll be done with QE, okay? So that's the first option. Now, the second option, okay, second was to taper further and then review the situation again in May. This is a bit more conservative, I would say. Okay, so this option over here is actually similar to what they carried out late last year. Okay, when they actually said that they're going to taper from the bond purchase rate of 5 billion per week to 4, and then they're going to review it in February 2022. Okay, so that means they taper, they hold everything unchanged for the next few months. It's something like hedging. Okay, something like hedging. They hedge few months down the road. All right. So this is a bit more conservative, I would say. Okay, maybe they taper from 4 to 3. Okay, and then they say we're going to stop tapering until May. We'll carry out another round of evaluation and review on the whole economic situation in Australia. Okay, so that's the second option, a bit more conservative. Now, the third option, okay, was to cease bond purchases altogether in February. All right, meaning tomorrow they're just going to announce, okay, the RBA will be, ending quantitative easing, aka assets purchase program, bond purchases, and things like that in February. All right, so that means they will not be purchasing any more bonds starting from tomorrow. Okay, starting from February, which is a very, very, very hawkish move, if you ask me. Okay, so with these 3 options, all right, you guys may be wondering what's the more likely option, right? Personally, I feel that, okay, the second option is out. Okay, the second being the one that taper further and review the situation again in May is out. Okay, like I've said, inflation is still rising. Okay, it's still ongoing, still rising, ever rising in Australia. Okay, economic recovery in Australia has been pretty good, I would say. Okay, recent employment data has been, well, very good as well. Okay, I think it was slightly lower than the previous data release, but it was actually higher than the expectation, okay, analyst forecast. So employment was something that Governor Low was actually worried about, specifically wage inflation and things like that. Okay, right now with the whole employment picking up in Australia, okay, that may actually ease Governor Low's concern on this whole, wage inflation and things like that. Okay, and then actual inflation, overall inflation has been rising. Okay, so hence the second option is pretty much out. Now it leaves us with only the first and the third option. Okay, personally, I feel that the RBA may actually carry out the third option. Okay, there is a chance. It's not very slim. Okay, I would say the first and the third option is pretty much almost like 50-50, I would say. Okay, maybe like a 45-55 kind of thing. All right. The third option, I wouldn't be surprised if they were to carry it out. All right, because the RBA from time to time tends to give surprises as well. Okay, so expect the RBA to actually cease bond purchases altogether in February. Okay, if they were to carry out the first option, okay, which is to do a tapering, okay, maybe a small one this time around, and then during the next meeting, probably in March, then they will carry out further tapering, or maybe they'll evaluate the whole situation again before carrying out any further actions. Okay, that will be a bit, I would say, too cautious on the RBA's end. Okay, which to be honest, okay, I'm not surprised. I won't be surprised if the RBA actually chose the first option of just carry out small tapering, and we'll see how it goes next month or during the next meeting. Because the RBA all the while, they have been pretty cautious. Okay, I have to give it to them, all right? Like last year when they actually carried out a tapering from 5 to 4, and then say that we're just gonna put a pause to all this whole thing and see how it goes until February, which I would say they did quite a good move. Okay, because shortly after the tapering from 5 to 4, there comes the Omicron issue. Okay, and that kind of like it kind of proves that the RBA actually did a right move by taking things carefully, okay, one step at a time, slowly, in case things like a new variant were to emerge, or another round of case rising, case shooting up, and things like that were to come back. All right. So for that, the decision made last year, I would say, is a good one for the coming from the RBA. Okay. So this time around, they may actually, or they won't go back to that, because that will be the second option. All right. Unlikely they're going to pick that again. Okay. But this time around, they may be a little bit more aggressive. Okay. Because knowing that central banks around the world has already been increasing interest rates. Okay. Like the Bank of England, like the Reserve Bank of New Zealand, and even for the Federal Reserve, okay, which is probably the most cautious one out of the major central banks out there, okay, are expecting a lot of interest rates hikes coming in this year. Okay, so they are moving. Well, in general, most of the central banks around the world, okay, major central banks, are actually making good progress towards monetary policy normalization, monetary policy tightening. Okay, so the RBA cannot afford to fall back. Okay, because if that's the case, Australian dollar is going to be very weak. Okay, against the other counterparts like the British pound, or even the US dollar, or even the New Zealand dollar. Okay, keep in mind that New Zealand dollar has already hiked rate twice, okay, by 0.25% each time. Okay, that's like a half percentage point increase already. But the RBA is still taking things cautiously, okay, one step at a time. So I actually expect them to be at least slightly more hawkish tomorrow. Okay, so which is why I rule out the second option. Okay, the first option is pretty much, I would say, from my point of view, okay, it's the minimum that the RBA will be carrying out. Okay, and then the third option is a good one. Okay, the third option is to cease bond purchases altogether in February. That will definitely be, I would say, give Australian dollar a comeback. All right, because Australian dollar has been falling for quite a while already. Okay, later on when I go over to the chart, you guys will see that. All right, but yeah, the third option will be a hawkish one from the RBA, and it will definitely give the Australian dollar a boost. Okay, against, well, I would say across the board. Right. So the third option and the first option seems likely. Okay, probably like equally likely, 45-55 or 50-50. Okay, that kind of likelihood. All right. So what other things can we actually pay attention to? Let me see. Okay, so there's bond purchases. What about rate hikes? You guys may be wondering, right? Inflation rising and things like that. Will they actually make any comments on that? Unfortunately, okay, this time around there's no press conference. Okay, I think I looked through the calendar. There's no press conference already. Okay, and there's only going to be the interest rate statement release, and I think they will be releasing the quarterly monetary policy statement this Thursday at 19:30 GMT plus 8. Okay, which they will include economic projections and things like that in it. All right. So something to pay attention to as well. Okay. So in the statement, okay, we would like to pay attention to this. Okay, if there's any any revision in forward guidance pertaining to interest rate hike. So late last year, okay, Governor Low has been saying over and over again, okay, in his speech, that the central bank does not expect interest rate hike in 2022. Okay, probably even no interest rate hike throughout 2023. Okay, the earliest is probably 2024 or end of 2023. So he has no idea why the market is actually pricing in an interest rate hike in 2022 and things like that. Okay, so this time around, all right, with this whole recovery in employment and this strong rise in inflation, we would like to know, we would like to see if there's a revision in the forward guidance on interest rate hike. Okay, specifically, will they be mentioning anything about with this whole strong recovery coming in and things like that in many aspects of Australia? We may actually be considering a rate hike in 2023 or maybe even in 2022, okay? Because such hints provided by the central bank will definitely be very hawkish as well. Because previously, no interest rate hike is expected throughout 2023. Okay, this time around, if they were to actually revise it, okay, making it, highlighting the possibility of a rate hike in 2023 or even in 2022, that will be good for the Australian dollar. Although personally, I feel that it's not that possible that the central bank will be putting it in statement in this set of interest rate statement, because it's too short and it's just too brief. Okay, so we may have to look into the monetary policy meeting minutes, okay, to draw more clues. Okay, but nonetheless, pay attention to it. Okay, in case they were to say something, drop a hint or two in the statement, there goes Australian dollar. Okay, it may actually strengthen. All right, so that is what we want to pay attention to, okay, in the statement. Quantitative easing, okay, what's the result of it? What's the result of the evaluation? Okay, will it be option 1, 2, or 3? Okay, and any mentioning of earlier interest rate hikes than 2024. Okay, so that's the prep for the RBA tomorrow. All right, any questions from you guys? Okay, I don't see any questions. I'll be covering the chart later on. Okay, so I'll go through the economic calendar later as well, and then we'll get to see the timing and things like that of the Governor Lowe's speech and the release of the quarterly economic projections. Okay, so for now, I will hand it back to Scott for his analysis on the DXY. Back to you, Scott.
All right, thanks for that, Gimme. And remember that the video is shared as well. We share it up in the LCMS Traders Club Trader Chat as well. If you do want to just touch base and review what was mentioned in preparation for the RBA meeting as well. I know it's a bit early for some of the traders that are in the club, but could be some good opportunities as well on the Aussie. But before we get into the Aussie and Kiwi charts, I'll just go through the US dollar index here. So we are still holding over 97. And just a point of interest to mention would be we do have the NFP coming up on Friday. We will obviously be going through a preview of that too. And again, just a lot going on. So that gives you a bit of a context on price action, just with the daily time frame here with the breakout and how significant that was as well. I did this earlier, but I'd like to go back to the weekly just to show the significance of when we were last over here. And it was in July of 2020. So that is some time ago. We're talking 18 months. So it's definitely worth paying attention to the significance of that breakout and the reality that we still have a lot more catalysts to push the US dollar theoretically higher with the interest rate increases. And there's a lot of chatter about how much, when that will start, and obviously the quantitative easing program and how that's going to be managed. So there is a lot to consider in regards to trying to grab the reversals on, trying to play bounces. So be cautious. We've mentioned this before with the short time period focus in regards to holding periods as well, unless you are a trend trader and you're a little more happy to hold longer. But most of the trades that we discuss are for shorter term holding periods. Now, I want to touch base on the news here. We did have on Friday evening, we did have the core PCE price index month on month, and that came in line with expectations. We did see equity markets rally as well, and that would coincide. We did see a little pullback in inflows into the US dollar as we saw it ease off from its recent highs at 97.30. It closed at around 97.15. Now for today, just a point of interest, we do have the Chinese holiday as well. So there's a bank holiday there all week as well. So just take note of that. And then we've got a little bit of data coming out for the US. We've got the Chicago PMI. That's expected to be a little bit weaker at 61.7. The previous read was 63. 0.1 as well. Then we've got FOMC member George speaking at very early, pardon me, at 1:40 in the morning. That's GMT plus 8, guys, as the time zone. And tomorrow as well, again, the main focus is that RBA, the cash rate. We've also got the statement coming out too. Very interesting just with Australia and what's going on with inflation. So that would be the key thing to watch for. We do have the ISM manufacturing PMI as well. So I won't go too far down in the week because it is chock-a-block. But definitely I would say from a price perspective on the US dollar, today we could see an easing back to 97, which I think it does need a visit and maybe a little bit below that. So just be cautious if you are looking to play the reversals to watch to see how price reacts at 97 flat on the US dollar index there. So that is the thought there on the US dollar. Now we've got the Aussie and Kiwi in focus now with Gimme, so I'll hand it back to you.
All right, thanks again, Scott. Okay, so before I go over to the chart, let's just look at the economic calendar. All right, so on Monday, today, there's nothing happening. All right, so we can just proceed on to Tuesday, which is the RBA at 11:30 GMT plus 8. Okay, so I've gone through that already. Just pay attention to it. If you guys are holding any Aussie trade later on today, just try not to hold it past this news, because there's probably going to be, there is very likely going to be movements in Australian dollar. Okay, and then on Wednesday, okay, the New Zealand employment data will be released. Okay, personally, I wouldn't recommend you guys to trade this. Okay, because 5:45 GMT plus 8. Okay, at this timing, it actually corresponds to the Forex market rollover time frame. Okay, time zone, timeline. Okay, wow, timings. Okay. So what happens is that during that period of time, okay, that's pretty much when the US market closes. Okay, and during that period of time, there tends to be a lot of spread widening and volatility and things like that. Okay, it's just like a switch over from one day to another. All right, so yeah, try not to trade this New Zealand dollar employment figure data. Okay, nonetheless, okay, employment change for the last quarter, okay, which is the fourth quarter of 2021, okay, actually declined. Okay, there's actually, the number of jobs added into the economy, into the New Zealand economy, actually declined. All right, so back in the third quarter of 2021, there was 2.0% change, and then right now in this in the fourth quarter, only a 0.3% change is expected. Okay, unemployment remains the same. Okay, it's expected to remain the same at 3.4%. Personally, I feel that this will not have too big of an impact on the New Zealand dollar. Okay, because it's all really on the interest rates, interest rate hike right now. Okay, whether or not the RBNZ will be carrying out 0.25% hike or a 0.5% hike. Although personally, I feel that they are likely going to stay with just 0.25% at the moment. Okay, with this whole Omicron thing coming in and things like that. All right, so that is for the New Zealand employment change data. Okay, and then we have Governor Low speaking on Wednesday at 09:30 GMT plus 8. Now, this is the one that it says, due to speak at the National Press Club in Sydney, audience questions expected. This is the speech that I would be careful. Okay, I'm not sure if there's going to be any live stream links provided. Okay, unlikely going to be the case because it's non-monetary policy related. All right, but because audience questions can be expected. All right, audiences, okay, may actually ask questions on the monetary policy decision which was taken place the day before on Tuesday. Okay, so Governor Low may actually drop a hint or two, okay, in terms of rate hikes earlier than the release of the meeting minutes. Okay, just like the previous round of monetary policy meeting. Actually, it's not only just that one, but probably a couple of times already last year. All right, we actually received hints, or we actually received more details on the most recent meetings, okay, from Governor Low's speech, okay, rather than the meeting minutes that was released like later in the month. Okay, so I will pay attention to this, and if he actually covers anything, drop a hint or two on any important points, okay, in any important issues, I will definitely update you guys again. All right, so I will definitely be paying attention to his speech on Wednesday at 09:30 GMT plus 8. All right, and then there's this OPEC meeting, which I already covered last Friday. Okay, and then on Thursday, nothing much. Okay, on Friday, okay, that is when the quarterly monetary policy statement is being released. I'll pay attention to the economic projections, okay, specifically what's their forecast for GDP, inflation, and unemployment, and employment specifically in the near future, okay, at least 2 to 3 months down the road, okay. Don't think there's going to be too big of a revision, okay, maybe an upwards revision on inflation, all right, if they were to admit that inflation has been rising in Australia, it's really very strong, going on very well, and things like that. All right. Nonetheless, I will still be sharing with you guys, my findings on the MPS on the following Monday. Okay, and then on the following Monday, New Zealand banks will be closed in observance of Waitangi Day. Okay, so we can actually expect lower trading volatility and volume during the usual New Zealand market opening, the period, the hours, usual New Zealand market hours. Okay, unlikely it's going to cause too big of an impact because, I mean, even if trading were to, be on hold in New Zealand on Monday, the other Asian countries are still going to be open, right? I mean, Australia market is going to be open, Japanese market is going to be open, and there tends to be volatility as well. Maybe just slightly less, okay, because we don't get it from New Zealand's traders and whoever's involved, market participants. All right, and then that's pretty much it for this week's of economic calendar. Okay, moving on to the charts. First chart, Australian dollar. Okay, can see that on a daily basis. All right, it is actually at the moment trying to bounce off my support of 0.70. This is actually a very low support. All right, if you were to zoom out, okay, actually, you know what? Let's just switch to the weekly chart. We can see that the last time we actually traded below this 0.7 level was actually back in 2020 July. Okay, that's like probably some, I don't know, 1.5 years, okay, ago. So this level would be something that I'll be paying attention to. Okay, at the moment, okay, we can see that Australian dollar, like I've mentioned just now, it has been on a downtrend. It has taken quite a strong hit, okay, ever since it failed to break above the 0.73 resistance level over here, okay, back in mid-January. Wow, mainly because, okay, this weakness was mainly due to the strengthening of the US dollar, okay, as a result of the hawkish Federal Reserve, hawkish tones sent out by the Federal Reserve, okay. So Australian dollar actually fall from 0.73 to, right now it's 0.70, okay, some 300 pips already. At the moment, personally, I feel that the whole US dollar strengthening due to the most recent hawkish Fed meeting as pretty much it's pretty much done. I would say, okay, it's pretty much done. Meaning I won't really expect further strengthening of the US dollar, especially against the Australian dollar, okay, such that it will push it below 0.70 at the moment. Okay, this is really a good key level, okay, from 0.7 to 0.6 something, okay. In terms of price, is quite a big, I would say, change, okay. So at the moment, since I'm not expecting the Australian dollar to actually weaken further from the US dollar against the US dollar, okay, hence I'll be looking for short-term buying opportunities, okay. So my entry level will be at 0.703, okay. Stop loss would be at 0.698, which is below the support of 0.7, okay. This is actually a 50 pips stop loss, and then my potential take profit, I will go anything below 0.71, okay, just to be safe. Although, okay, I'm not expecting Aussie dollar to go down any further, but still, in order for Aussie dollar to really strengthen further, okay, further meaning, ahead of above the 0.71 key level, okay, the RBA will have to be hawkish. Okay, they have to catch up with the Federal Reserve. They have to catch up with the other central banks around the world. Okay, in terms of clearing their quantitative easing, and of course, highlighting to the public that interest rates hike, may take place earlier. Okay, maybe in 2023 at the least. Okay, so with these kind of hawkish message, it is possible that we can see Aussie dollar making a comeback. Okay, a change in trend, a reversal, or you want to call it however you want to call it. Okay, only then will we see a likely strengthening of Aussie dollar above the 0.71 level. Okay, so for now, meaning from today until tomorrow's release, okay, in a scenario whereby Aussie dollar were to take a retracement, okay, well, you guys can consider looking for short-term opportunities, okay, with this trade idea that I've just shared. Okay, so yeah, just be careful, just keep it short-term, because tomorrow there's the RBA. All right, so that's for the Aussie dollar. Now let's head over to the New Zealand dollar. Okay, similarly, all right, we see that the New Zealand dollar has weakened. Well, New Zealand dollar has weakened against the US dollar for quite a while already, right? The first wave was actually a bounce off the I would say around the 0.72 level. Okay, bounce downwards all the way down to like 0.75. Okay, and then it hovers there for a period of time, and then it goes down further due to the recent hawkish Fed. At the moment, it's bouncing off my support of 0.654. Okay, and if we were to look at the weekly chart to see how low it is, okay, we can see the last time as well. Okay, it actually traded lower than the traded below the 0.654 level was back in June 2020. Okay, so it's again, once again, it's probably like around 1.5 years ago. Okay, so with that same thing, okay, I'm not expecting the New Zealand dollar, okay, the Kiwi against the dollar to trade further below. Okay, don't think we're going to hear from the Reserve Bank of New Zealand for the next 1 or 2 weeks at least. Okay, but nonetheless, okay, like what Scott has mentioned earlier, there's this US non-farm payroll coming in this Friday. Okay, so all hope is not lost. All right, although at the moment I'm actually expecting the New Zealand dollar to actually take a bit of a retracement. Okay, as the Federal Reserve's hawkish tone is pretty much done deal already. All right, so in a case whereby a retracement will take place for the New Zealand dollar, I'll be looking for buying opportunities at 0.658. Okay, stop loss will be placed at 0.652, 60 pips, and my take profit level will be at 0.668. Okay, yeah, just before my resistance of 0.674. Okay, what else can I say about this trade, man? Because yeah, I'm actually I actually feel more promising on the Australian dollar trade idea than the New Zealand dollar trade idea, to be honest with you. Okay, because at least the RBA is speaking tomorrow. I mean, is announcing their monetary policy decision tomorrow. Okay, and that will have a boost on the Aussie dollar. Okay, and then you guys might be wondering, what about the positive correlation on Aussie and Kiwi, right? When one moves up, the other tends to move up, vice versa. Okay, that may hold true. Okay, in a scenario whereby the RBA were to release anything or to announce anything hawkish tomorrow, okay, we may actually see a positive move from the New Zealand dollar. Hence, New Zealand dollar, Kiwi dollar may actually strengthen as well. Okay, but to be honest, in that kind of scenario, I would rather take on the Aussie dollar trade rather than the Kiwi dollar trade. Okay, so I would say no reason for me to take New Zealand dollar over Australian dollar. Okay, but if you guys, for some reason, okay, maybe because of your personal support resistance zones and things like that, would like to take up New Zealand dollar instead, okay, or even New Zealand Kiwi instead, okay, then yeah, just pay attention to this positive correlation. But most importantly, okay, look at the chart of Kiwi dollar, Kiwi yen, or Kiwi francs before trading, okay, because it's how the market reacts to the news that matters the most, okay, because a hawkish tone from the RBA may not lead to a strengthening of the New Zealand dollar, okay, but it really all depends on how the market moves, okay. In a scenario where it does, then okay, of course, sure, you can look for short-term buying opportunities. But in a scenario whereby New Zealand dollar were to weaken, okay, whereas the Australian dollar were to strengthen, okay, then why not just trade Australian dollar, because the direction and the tone of the central bank both tallies. Okay, hawkish tone, strengthening of Australian dollar, it all tallies. Why not go for something more certain rather than trading the New Zealand dollar? All right. So that's it for the New Zealand dollar trade idea. Okay. Any questions on the trade idea or the RBA meeting tomorrow? Okay, there's no questions. I will hand it back to Scott.
All right, thanks for that, Gimme. And just look with those trade ideas as well. Make sure that if you are a bit unclear with anything, ask questions in the Traders Club forum as well with EchoFin. Gimme and I are there during the day. We are seeing a little bit of a lift in the Australian equities market as well, just coming into the final hours. So that's been nice if you were the long side as well. So looking like we'll see early days though, but again, we're here to update you on any changes as well, guys, within the club. So thank you for watching and have a great rest of your Monday. Bye for now, everyone.